What is this tax reform about?
Hello, wonderful. This is Susan, protecting taxpayers. How? By empowering and illuminating you with easy to understand tax information. Today, I want to talk about the tax reform of many of the changes for the tax year when you do your taxes in 2019. And I just want to start with the tax withholdings. It is effective January 1st, 2018. The tax withholding table, it's now lower. So your employer is changing that. You as the employee don't have to do nothing, but your employer has until February 15, 2008. That means that you're going to get more money in your paycheck. And these withholdings does not apply for Social Security and Medicare, only for federal taxes. And the next one is the federal tax rate. It has changed drastically. This change has not happened, I think, for the last 30 years. And now, for the first time, we have this huge change. And I'm putting here a comparison so that you can see how the tax rate changed from 2017 to 2018 tax year. I want you to notice this. If you make 157,500, you are in a 3% lower tax bracket compared to prior year. And notice for married filing jointly, if you make less than $400,000, you will also be in a 3% lower tax bracket compared to last year. Now, for those that make more than that, you are going to have another opportunity because the AMT threshold, it's now for married filing jointly, $1 million. For singles, $500,000. So it has drastically increased. So that's going to help those of you who pay extra tax. And for what I mean by that is let's pretend that there are two tables. One is called the federal tax table and one a federal tax rate table, and then the other one is, let's call it federal AMT tax rate table. Well, if you make a lot of money, you're going to pay, besides paying these, you're also going to pay the second tax, so extra tax, 26 to 28% more. So for those of you who always pay the AMT, which is the extra tax, you may not have to pay it for the first time because that threshold is higher. So that's good news. And also the child tax credit, that will help you also, as you can see. Now, it's standard deduction in all different types. Look at that. Almost 90% more compared to prior year. Married filing jointly, 24,000 instead of 12,700. In singles, 12,000 instead of $6,350. That's huge. And the personal exemption, that it's gone. We're not going to have it anymore in 2018. But for the child tax credit, instead of getting 1,000, it's going to be 2,000, which is awesome. And a lot of people are going to be happy about that. And the threshold, for those of you who never got the child tax credit, because you made more than 110,000, now you're going to get it if you make less than 400,000. So that's another change. And also, there's a new credit for other family members that we never had before, and it's going to be $500 deduction there. For the mortgage interest, that in 2017 there was no limit, but for 2018 there is $10,000 cap in houses that are $750,000 or less. That if you purchase a house for $750,000 or less, then you're going to be able to deduct your mortgage interest up to $10,000 for those particular homes. But a lot of people are not probably going to itemize because the standard deduction is already so high. So we're probably going to see a lot less people itemizing. And the next one is for medical expenses. That filter, it's 7.5% instead of 10%. In other words, you're going to be able to see a little bit more of your medical expenses being deducted. But if you don't itemize, it doesn't apply. Next one, in 2018, we still have the $250 deduction on the sale of your residence, of your primary home. If you sell your home, then you don't have to pay profit on the first $250,000. Actually, you don't even have to report it. But if you're married filing jointly, then you have up to $500,000, and there is no change there. And for divorced people too, if they get divorced and one of the spouses live in the house, when they sell the house, it could be 10 years later, they both still get that deduction. Now for business, there is no more entertainment deduction. It's gone. Now we only have the meals, and for the meals, there was a category of 100% and 50%. Now there's only 50%. But the good thing is that we get 20% deduction on the profits that came from an S corporation or a partnership. So, for example, if you make $100,000 in from an S corporation profit, now you're going to put that in your personal taxes, right? Well, now you're not going to pay taxes on 100% of that profit. You're going to pay taxes on 80% of the profit. That's like big. Overall, it's not perfect, but it's definitely an improvement. I think I'm going to see more happy faces for next tax season. If you're a taxpayer and you're paying less, hopefully you don't spend too much. Hopefully you save in a Roth IRA, right, for your retirement. That's money you're going to need to eat later on when you cannot work. And for those business owners, now you can expand, you can improve, you can pay better wages to your employees, and you can probably pay bonuses so your employees don't go somewhere else and you keep them. Less turnover, right? That's right there, huge savings. So I hope this information help. I'm going to continue to post more videos in regards to this tax update. The IRS does not have the publication yet because this thing just happened, and they usually take a few months to have the publication ready. So right now this is all I have, but I hope it helped. Thank you so much.
If you like this video, please subscribe, share with your family and friends. I will embrace your inspiring comments, and if you have questions, send them. I'll be more than happy to assist. Until next time, remind your heart to smile and fight for your dreams with honor and undying determination. Thank you so much.